if your spreadsheets look anything like mine, they must be a nightmare to keep account right now for all the transactions. And actually, that's kind of maybe that's a topic maybe just worth mentioning briefly is in terms of accounting and keeping track of wins and losses and all that. Is there any tips for that, or just how do you guys go about doing that?
I actually don't have a super way of keeping track of it. I just use whatever tools my platforms offer, and I just use that, just very in the moment, and I don't go back and also look at what have I done with such and such stock. Usually, I mean, I usually remember because it's usually a big win or a big loss. But I don't keep a spreadsheet or anything like that that's very organized, about, what have I gained from this or that. What I would like to do, and I haven't been able to do this yet, is to actually keep different trading accounts with different themes or purposes. For example, I would love to have one platform that I use just to buy uranium stocks, and then one platform to say gold, and one platform for another, because then you can judge what's going on in the different commodities at any one point by looking at your different accounts and sort of get a better pulse for the market. Because every time I go into my accounts, it's like, okay, each individual stock needs to sort of be looked at on an individual basis. Then you have to look at it yourself. Okay, what is gold doing? What is uranium doing? And I think it wastes your time a lot. Unfortunately, I haven't been able to do that yet because I have two platforms that are in two different countries, and some stocks I can't buy in one country, and some stocks I can't buy in another country. So I haven't quite been able to do that yet, but I would love to just be able to have, thematic accounts.
That's that's interesting. So I'm in Fabi's boat in terms of not having. Well, I'm probably even less organized overall. Like really, I have just all these notes all over the place. Like they're in these like little notepad things on my computer, and I don't. It is a huge mess. I definitely have this massive list of companies that I follow via CEO.ca. Oh, actually, yeah, Fabi's video is really good for helping me, realize I should organize it in certain ways, by countries or by commodities. But even there, for me, what like I definitely don't have the discipline that Jay has for even, both for transparency and just for myself. But when it comes down to is that I like uh, kind of having all these small companies where, if I lose a bit or make a bit, it's okay. Like I don't really I mean I can always check my brokerage account and see, oh, this is what I ended up losing or making, but I don't really care that much. What I care about is coming across the potential big winners, and I do remember both the big winners and the big losers for those. Maybe it used to only be a couple stocks, but now it's like, a half dozen stocks where I have really high conviction, and some of them don't. They definitely don't work out, and I remember, pretty close, like how much I lost and what I did wrong. So it's more about planting seeds to get to those bigger positions, because I know, in the by the end of this cycle, what it's going to come down to, at least for my portfolio and for my goals in this, is that I'm going to have a couple huge winners. And if there's an interesting parallel, just think about a venture capital firm and how they're constantly making bets, and a lot of the bets lose all their money, and a lot of the bets are kind of even, and on a lot of bets they might double or triple. And even though it's never going to be this exaggerated for me, but it's absolutely insane to know that something like an Amazon or an eBay or whatever, for those tech venture capital firms, it's ridiculous. The gains on those one or two literally make up for everything else. And so if there's one thing I'm super focused on, it's finding those companies. And I'm okay with fudging the numbers in the short term, but I really want those massive, multi-baggers. And that also leads back to why I'm, much more focused on exploration. This is definitely not for everyone, but I think I think that if that's I kind of ignore a lot of the little numbers and really hone in on the big numbers, and I'm okay with that. It's definitely going to be different for everybody. I think Jay is one of the most disciplined, transparent people I follow, and I find that really interesting.
I'm kind of a nerd, so I've tracked every transaction that I made since I started this space, because it was a lot of it was a thought experiment for myself. It's basically, when I first started, everybody said to me, basically, you can't beat the market. Don't even bother to try. Just buy the S&P 500 and shut up. Like, why are you wasting your time with this? But, it wasn't like I was out to prove anybody wrong or, try to prove anything to myself. It was just kind of a thought experiment. Like, I think the mining sector as a whole has been decimated, and these stocks, I mean, if they can get any cheaper, it's very hard to fathom that. But they actually did, because I started buying in summer 2015, and by early 2016, I was like, feeling like the biggest idiot in the world, because I was already down like $60,000 at that point, right? So I was tracking all this, because like for me, without tracking it, you can't really quantify it. So it's very hard to recall a period of time even, and just base it off like raw emotion. Like, what was I feeling then? Like, it's like, yeah, okay, I remember despair, but how bad was the despair? So that's kind of why I tracked all this stuff. Because when you actually, and I post that a lot, and I think it's very useful especially for newbies. It's like, if you're down like 30% and $60,000, like, are you going to get shaken out of this? Because if you had conviction something was cheap and now it's like 30% cheaper, like, does your conviction actually change? Because if it does, then, it's not very logical, because it's like, why would you be like, like all of a sudden throwing in the towel because it got cheaper when you already thought it was cheap? And, in that period, I was trying to buy as much as I could or whatever. So I got into the habit early on of tracking everything. And then we had that run up last year, so it kind of skewed things a little bit. But one thing I've kind of learned is, I guess when you're first starting, you want those big wins. And I was after that at first, because they make the profound difference. Like Nick said, if you can just find the next Amazon or something, I mean, that's life changing, right? For anybody who got in with any kind of meaningful contribution, 20 years ago, whatever, with Amazon, I mean, you would be, you would be so much like better off because of it. So, like, that's kind of the mindset I took at first, is I needed all these multi-baggers, to make real significant profits. But one thing I actually find kind of fascinating too is my approach has actually changed in the last, let's say, half year or so. And I think, there are many ways to succeed in this resource game to make money. You could either get in early exploration very early, make the 10 baggers, and that'll be tremendous. I think another approach is like, it's a lot more conservative. It's the one I'm kind of trying to employ right now, which is basically, I'm trying to basically work off that base that was created based on the rise from last year into the summer. So the initial starting capital that I was working with has already, more than doubled. So I have that as a new base. But basically my approach is, I still track everything, but I'm not so focused on individual performance. It's more of everything as an aggregate. So if I have like 25 companies, the only thing that really matters to me at the end of the day is that whole, amount, that whole dollar amount is moving up. Like if it's going up, then I know the portfolio is at least performing to a degree. Like, because I always look at it like, what is your ultimate strategy? What is your exit point? And for me, how I rationalize it is, if that total figure reaches whatever my goal is, right, I would be content at that point to just cash out the entire portfolio, like liquidate everything, sell every position, and just take that whole final figure amount and call it a day, kind of thing. So, when you do that, you can actually take like a black box approach where, let's say, like 2 or 3 positions, just blow up and they amount to nothing. But you were lucky and fortunate, you had a stock that ran up like 5 times or something. For me, in the end, it doesn't even matter like what did what. The only thing that matters to me is the total overall performance. So with that mindset, just going in with that kind of mindset philosophy, I'm kind of like shifted my focus, where now I'm, more interested in like even like these mid-tier producers that we were talking about earlier, where if you can get a 50% rise out of them and you have a few of them or something, then on the whole, as an aggregate, it can actually move the total dollar amount quite a bit, where it, like, I don't need to find a 10 bagger if I can just get a bunch of 50% rises, because as a whole, that will lift the portfolio and it will give me that final dollar figure amount that I'm after. And then, that, like, I could call it a day and, maybe you could leave some behind just for speculation, play money kind of thing. But that's kind of the approach I've been taking. And I've kind of learned over time, like, just when you track everything, like every single win or loss, like, like what worked and what didn't work. And for me, what really worked was just that initial surge that we had, like basically after Brexit until, the August highs or something like that. That was, like, for me, where the bulk of those gains and returns were made. So long story short, it's basically I've just kind of rationalized in my head, like, if I can get one more surge like that, I will have accomplished more with this trade than I could have ever envisioned when we first started in the summer of 2015. So that's why I do what I do. And actually, like, I came to this conclusion and this investment thesis because of the spreadsheets and how I was tracking every trade and basically seeing how the portfolio grew over time. And basically, like, when you're within striking distance of your underlying fundamental goal, then if I only need so much more, then, my whole strategy shifted. I wasn't looking for the big win anymore. I was just trying to be a little more conservative, and just to get, like for me, it would be a huge blessing just to get a 50% rise from, like, the entire portfolio as an aggregate. Like, that would be all that I'm after right now.
Interesting.
If that makes sense. Engineer. This is when we realize Nick and Fabi are not engineers.